I've been sitting at my desk for the past 2 hours trying to find the intrinsic value of this. I'm talking about gold. Every guru on YouTube is telling me buy gold and it's the end of the world. As an ex-finance lead of GE, I always question the narrative, and we want to question, why does Wall Street want you to watch the news? It's because there's always hype. There's always fear. So the biggest thing is we want to move around the fear and kind of just ignore basically the news. That's what actual Wall Street does. The biggest retail trap is drowning in and being completely watching the news 24/7. That's what they want you to do. Because at Trader Foundation Elite Academy, we watch where the money flows. And they always leave subtle clues. And my job is to help you find those clues. Now, the Strait of Hormuz is 20% of the global oil supply. It's a very high interest for the world. Cuba is 90 miles away from the coast of Florida, and we have US restrictions on Venezuelan oil exports that are having to cut off the line for Cuba. Oil shocks in history have always occurred. 1973, we had the OPEC embargo. 1979, we had the Iran Revolution. 1991 was the Gulf War. 2022 was Ukraine. And today is no different because we have the Middle Eastern conflict going on. This is also leading to petrodollar, which is the global oil purchasing in US dollars. This is where the next level of money circulation that we are watching for. Global oil is exclusively priced in and settled in US dollars, forcing sovereign nations to hold a massive supply of reserves because they have to secure energy. And excess dollars held by oil exporters are structurally recycled back into US treasuries, and it's an endless loop. And petrodollar is not just a trading mechanism, it is the foundation of the modern global financial system. Typical retail trap is panicking, watching the news, and having diamond hands and PTSD. And also we talk about it in our masterclass, is to guide you into understanding how to be like Wall Street and seeing them move well before retail sees it. Now, the biggest thing, this is the divergence trap and the retail PTSD. Smart money is already moving their money outwards, and then once the actual post shock happens and the market starts to recover, retail is already too scared and they're like all out of their positions. And my biggest takeaway that I'm going to be going over with you, you can be in hard assets. However, I'm going to go through it with the charts for you. While I believe gold is pretty darn risky right now, and there's a lot of other alternatives for you to make a better investment. So while all the gurus are telling you gold, buy gold and versus Google actually makes money. On top of that, you are on YouTube right now. And just to give you an idea of how much money that they have, $185 billion infrastructure lead. YouTube makes more money and is 33% larger than Netflix. All of Netflix. And they have 4 guaranteed inevitable. They're completely outperforming. And this is the edge, because for me, rather than buying gold, I have been buying Google. And I started buying Google back last year in 2024, when the narrative was like, oh, search is dead. I started heavily buying, and I'm sitting on over 75% gains. Deciding to long gold would be equivalent to you being invited to a party and all the food and the drinks are gone and you're just left with sloppy seconds. Now look at this. On the daily chart, we have been consolidating in a range. The Bollinger Bands are getting tighter, which is consolidation, and it looks like more risk is to the downside versus to the upside. On top of that, if we really look at gold and isolate it, I know it's only halfway through the month, but this is literally all sellers. Wall Street can liquidate retail at any time. Big banks have money that they can hold through all the margin events, and they can change their rules whenever they want. Retail, however, cannot withstand that. On top of that, if we pull up on the monthly time frames, look at this. 2011, gold was at 1936. It took until 2020. And so all the gurus telling you buy gold, again, you're very late. This move started years ago, like back in 2024. Gold doesn't actually produce revenue. Now, however, Google, on the other hand, Google in general has a forward PE of 22.1. And even in the largest bear markets, we have had, which was back in 2022, 45%, but it recovered a year later. But then gold, on the other hand, recovered like 8 years later. And Google has so much funding and money. They are 33% larger than Netflix. They have Waymo that's not even considered in their valuation. Gemini, Notebook LM, all these items, they're constantly improving. And also too, even like Gemini is being used on all the phones nowadays. Even Apple is partnering with it. In correction territory, it's down 15% from highs. It's even still a good fair value. So IGV is a specific tech sector. So there's isolated ETFs. So there's QQQ. And there's also more specific ETFs that isolate even more. IGV is expanded tech software. What I see here is we dropped. Obviously, we are down almost 35% from highs, a bit more actually. Well, we have a little bit lower of a wick. Killed everyone's stop losses. So retail was like, oh, this thing is going down. And what do? Wall Street buys them all up and moves price action higher. And on top of that, we had a lot of intense selling, and all of this is all buying, which is overtaking the selling pressure. We're going to be going over exactly how we trade like institutions in our masterclass. We had $1.5 billion of inflow of money, and that's the second largest in history. So our community and my job is to always tell you, where is money flowing and how can my communities always profit from it? IGV has specific stocks in this sector. So what did we do? I looked into PLTR. And remember, I don't watch the news. That is retail mentality. Now, if I pull this up on the weekly, you can see it. We started creating a floor, 36% drop. We have accumulation, a floor hitting, all buyers starting to come up. And because they knew, because the $1.27 billion for Project Maven. If you're tired of being sell-side liquidity and want to trade just like Wall Street, join us at Trader Foundation Elite Academy and join the masterclass. The link is below.